Hi, I'm Joe Park, CEO of Horizon Stewardship. We are continuing our Resilient Leadership series, helping churches prepare to do ministry in times of social distancing and the coronavirus crisis. I have with me today David Atkins. David is the president of the Missouri United Methodist Foundation. He was a practicing attorney before coming to the foundation, and I have invited David to share with us what he has learned as he, in his role, has been studying the CARES Act and its application to the church, specifically the United Methodist Church, but more broadly, the church in general. David, thank you for coming.
Well, thank you, Joe. And I just want to say a particular note of gratitude to the Horizon Stewardship Company and the outstanding efforts they have put in the last couple of weeks, helping to be a resource and really a clearinghouse for information for our organization and lots of others like us. I would want to add a slight point of clarification about my background. While I am trained as an attorney, I am no longer a practicing attorney. And so my comments today are layperson comments. I am not offering legal advice, and there is a lot of this material that you will want to check with your professional legal counselor about.
Thank you very much, David. So why don't we begin by just giving us a quick overview of your understanding of the CARES Act, and specifically, I think what people are most interested in is the Payroll Protection Act loan, because of the perception they need to move quickly if they're going to have an opportunity to participate.
Yes, the CARES Act, which CARES is an acronym for Coronavirus Aid, Relief, and Economic Security Act, has a number of parts to it, some affecting individuals, some affecting organizations, and the piece that is really front and center with churches at the moment, trying to understand it and determine whether it is a helpful opportunity for them, is the payroll or paycheck protection program that is created by this act. And it's essentially a new loan program administered through the Small Business Administration. And for the first time, they are opening up Small Business Administration loans, in this case, for not-for-profit organizations, including churches.
So David, why would a church be interested in a payroll protection loan?
Well, as the name suggests, the goal of this program is to help sustain small businesses and smaller organizations through this time of shutdown. And the goal ultimately is to help those organizations retain their employees, so that those employees do not have to go out and seek unemployment benefits, but in fact continue to receive their salaries and benefits through what is everyone hopes will be a fairly brief period of maybe a couple of months. So it's a very short-term assistance to just keep the wheels moving out there in the basic economy.
So David, if I'm a pastor, finance chair, head of the church council, what are the considerations that I should be weighing as we consider, is this a good option for our church?
Well, it's basically, what a lot of churches are trying to start with is, oh gosh, we're shut down. We do not have our usual weekly worship where we are live and in person together. And is this, first of all, going to impact our giving? And with each passing week, each church is able to better get a sense of what this shutdown is doing to their giving and their revenues that are driving their budget. And you get mixed reports from the field. There are churches who are actually seeing some giving increases. Those tend to be, I think, some of our larger churches and churches that are already up to speed with doing things online, worship services, as well as online giving. I think the churches that are really going to struggle a bit more are our smaller churches and even some of our medium-sized churches who have not been forward thinking on the e-giving, the electronic giving and online giving, and may even be new to online worship. And so I think some of those churches are seeing a dip in giving, but hopefully that dip is tied more to the members of their congregation who are just not used to doing anything other than an offering plate and who have not gotten themselves organized around giving that either through putting it in the mail or some other online means. And so that's the real impetus for churches to look at this, is anticipating some shortfall in revenues that this loan could really assist with. Because the key element of this loan is that if you meet all the parameters and you are successful in obtaining the loan, then the loan will be forgiven. And so it becomes a grant that you do not have to pay back. That is a pretty attractive aspect of this. Now, the bill contains provisions to set aside $350 billion for this purpose. That's a big number for most of us in our personal lives, but you spread that out across all the small businesses and not-for-profit organizations across the United States, and the odds are that those funds will be drained rather quickly. And so that's why there's an urgency around understanding the law and getting in line with your local small business administration loan lender. A number of local banks are already in the SBA program. You need to find out if your bank participates and can be your go-between with this program. That is also a key person, the person at that bank, in terms of really keeping you up to speed with this program. There are still details about this program that are not written and released. The lenders are working hard to understand that and get that out to the folks that they think are interested in this. So before you do anything, you may just want to call that person in your town, that person who is with the bank that your church already works with, and have that conversation and get a sense from them where things stand.
So internally, what steps do you recommend a church take? One, to assess, does this apply to us? And two, to prepare themselves for a loan if they think that they're going to sustain an economic loss, may have to lay people off, because that's the point of this, is keeping a full staff. What would that look like inside a church, and what are the requirements from the Methodist discipline?
Well, first of all, do we anticipate a revenue shortfall that makes us need to think about this? Secondly, is a commercial loan of this nature and a government-backed loan of this nature something that our church is willing to adopt? And in that regard, to qualify for this loan, a church will need to affirm that they uphold certain basic federal rules and regs. For instance, OSHA. Are your employees generally working in safe environments that are compliant with OSHA requirements that way? EEOC requirements, equal employment opportunity requirements. Some basics that are broadly complied with across the society, and I think within most United Methodist churches, but that is something your church is saying you affirm and will comply with during the time frame of this loan. And that time frame is brief. You can essentially think of it as 2020, this year. We won't get into the weeds necessarily on this narrow window when these funds are applied. But if your church has the need, if your church is willing to comply with the basic outlines of an SBA loan, and that's, again, something you can get from your lender, then the question is, well, what do we have to pull together to comply? And one of the things that is a number of churches are having some question marks around is, since we're not for profit, we need to prove to the SBA that we are in fact a 501c3 public charity. Well, by definition, every church is a 501c3 public charity, but the lender may want some documentation affirming that. And in Methodist circles, that is generally maintained by the General Counsel on Finance and Administration, the GCFA. That's a national office of the Methodist Church that maintains the group ruling from the Internal Revenue Service for all Methodist churches. Again, all Methodist churches, by definition, are affirmed by that group ruling to be public charities in that they are churches, and they are specifically Methodist churches. And if you contact GCFA, go on the GCFA website, you can easily download all the documentation that explains that. While that should be adequate, there is some murmuring out there across the land that some lenders are not up to speed with what a group ruling is. They've never worked with a church before, and they're balking at accepting the group ruling. Regular standalone not-for-profits don't have this problem because they have already applied for and received an individual letter from the IRS saying, yes, you are a 501c3 public charity. Churches do not have that on an individual church basis, but again, they have perfectly adequate documentation through GCFA that your lender should accept, but again, that may be a little bit of a hiccup in this process. Among the other things that your lender will probably need are your financial statements for 2019, and that is primarily tied to a provision in the rules around this loan that relate to the calculation of how much of a loan you qualify for, the maximum you qualify for, which is based on operational averages from that prior year. And again, your maximum loan is, you look at that monthly average for certain operational expenses from that prior year, and then take 2.5 times that monthly amount, and that's your maximum loan amount. And so let's say, just in broad terms, very broad round numbers, let's say a local church has a total budget from the prior year that, let's say it's $500,000, or more specifically, let's say qualified operational expenses in the prior year totaled about $500,000. That means that your maximum likely qualified loan amount is going to be around $100,000. If that is kind of a make or break number for your church, then this may be a very attractive thing for you to move forward with. I hope I've explained that fairly clearly.
Yes. David, let me insert a couple of things. One, to our listeners here, that GCFA website link is going to be attached to this, as well as information related to how you calculate loans, those kind of details. That's not really the purpose of our call today, but those are attached as links, so you can rest assured that you will have easy access to those. You've spoken primarily about Methodist churches. We have probably something in the neighborhood of 50,000 churches that are viewing this. What in their cases, they are looking for documentation that they are a 501c3. Either they have filed that as their church, their denomination has it for them, but they need to locate that because their lenders may very well be asking for some sort of proof that they are in fact a 501c3. David, am I saying that correctly?
Correct. The denominations should have an office like the General Council on Finance and Administration that maintains the group ruling and the list of churches that are under that group ruling. Independent churches should have their own 501c3 determination letter from the IRS.
Thank you. That is very helpful. So, David, you mentioned that this loan is forgivable, or at least partially forgivable. What are the circumstances that create the forgivability?
Well, the key elements there, and again, you need to refer to the language of the legislation. There are a lot of good summaries out there, and for Methodist churches, I would refer them to the WestPath website for a good summation of all the provisions of the CARES Act. And many of our annual conferences have posted some very good summaries as well. I know the Missouri Annual Conference has. The key element in the forgivability piece is that you have used the loan funds for eligible expenses, and that includes payroll, utilities, mortgage payments, rent payments. Eligible expenses are what the loan has been used for within the 8 weeks following your receipt of the loan. Okay, well, that's kind of an interesting definition, and I think it's quite easy for churches when they're calculating their maximum loan that they qualify for. They may think, well, let's go for the whole thing. That is probably going to be a bigger number than they are able to actually expend in that 8 week time frame for the eligible expenses. Therefore, any amounts of the loan that they do not use in that 8 weeks for the eligible expenses, they will have to pay back. And the maturity on these loans is 2 years at an interest rate of 0.5%. So not necessarily a deal breaker there, but it is a nuance that churches need to understand.
So David, talk to us about the approval process within the United Methodist Church. I understand that there are no personal guarantees with this. There is no collateral requirement, which makes it very different from the typical loan that a church might take out. In the United Methodist system, what are the steps that leadership needs to take to gain approval for this loan?
Well, and that's a very excellent and timely question. And I would strongly encourage every local church to contact their district superintendent about that very matter. Our understanding at this point, and certainly our hope at this point, is that because this loan does not require collateral, like a normal capital campaign related loan might require, that the usual Methodist process requiring a charge conference and all of the formalities will not be required. Furthermore, because of the short time frame, the earliest date when SBA is supposed to start taking applications for these loans is April 3rd. Well, that's just upcoming, and they will continue to take applications until they run out of funds, and everyone anticipates that they will run out of funds fairly quickly. So time is of the essence. I think the nature of this loan, I do not think the usual Methodist formalities will necessarily be required, but I think to the extent you can, you definitely want to engage with your DS, give as many people a heads up as you can that this is a process you're entering.
So just tossing out for non-United Methodist here, It may be that your church polity requires a church vote for any loan. There may be notices that you need to give for a church vote. You need to be giving consideration as to how you are going to do that in a season of social distancing. So beginning to give thought to that is going to be important if you are a Methodist church or not. David, one of the questions that we're getting a lot on our website and emails to us is the question of calculating the payroll that actually sets the base number from which this loan is amount is created. People are asking about W-2. They're asking employees are asking about 1099 employees. They're asking about benefits. And I understand there's a cap of $100,000 for highly compensated. Does this loan cover both W-2 and 1099 employees? And what does that look like in the typical church?
Our understanding is yes, it covers both. W-2 employees, those are typically the salaried members of your staff, as well as the 1099 folks. Let's say you hire a lawn service or you contract with an organist. Those kinds of expenses are also part of the payroll that is included. One particular item that impacts pastors is whether or not the housing allowance as part of the total benefits package is part of this payroll. And again, not entirely clear, but the preliminary thought is that yes, that would be included.
So we get a lot of questions about churches that have daycares. Many of them have had to close the daycares. They've had to lay off their employees. Some of those are W-2 employees. Some of them are 1099s. We're getting questions, can the church apply for these funds and use them to pay employees from the daycare, even if they're not working? Is there a period in which you can pay back wages? And is where that ownership of the daycare resides at the church, a separate 501c3, a separate for-profit. David, if you could just speak to that a little bit, because I know that's a hot topic with a lot of churches.
Well, again, I would encourage folks to seek legal counsel and also work with their lending representative on that issue. It really relates to, in my opinion, the structure of the daycare and whether it is separately incorporated, whether it has its own IRS letter ruling acknowledging its status as a 501c3 public charity or not. If it is part of the church budget, really part of the church operations, then it is likely not to have a separate existence that would cause it to be treated as anything other than part of the local church operations. But again, that's a nuanced issue that bears further study.
And so you want to seek professional counsel on that, someone to look at the incorporation.
Absolutely.
But that daycare may be able to apply on their own, even if they don't qualify to fall under the church. Is that correct?
Correct. If they are a 501c3 public charity in their own right, which schools often are, or should be, then they would be able to do that directly. Yes.
So let's circle back around to loan approval. What I heard you say is your understanding is that because there's no collateral involved, most of the traditional triggers of charge conferences and church conferences and presided over by DSs would not apply. Your counsel, I heard, was to contact your DS and have that conversation, making sure that you are working with your DS, letting them know where you are in that setting, and that it may be as simple as a administrative board or a church council vote to authorize this loan. Am I repeating that correctly?
Correct. I think the when in doubt, it is, I think, wise to seek counsel and advice, and to reach out in a collegial fashion to your district superintendent on a point like that. You've kind of got two groups trying to digest this information. One is the legal community and the banking community, and then the other is the church polity community, the procedures that are mandated by the denomination on this sort of church decision making. And so you really need to touch base with both. And you may not get a definitive answer in either case, but just so everybody is not blindsided by what your church is contemplating.
So we've talked about a variety of different subjects around things that churches should consider, whether this is right for them. If they have determined that this is a direction that they want to go, they've coordinated that with their district superintendent, they've gotten direction from their church leadership, what would be the next step?
Well, again, reach out to your local lender, get in the queue, and that's going to buy you a little bit of time and breathing room to understand what your lender says they need, for you to kind of double check and gather the materials. The application date is, the application window opens on April 3rd. You can already be kind of gathering some materials and initiating those conversations. One item that we have discussed informally, and that might be worth mentioning here, there is a little bit of a perhaps a philosophical issue for some churches around the idea of the whole CARES Act really being a national response to try and really focus on individuals and individual businesses and keeping those wheels turning. And a big piece of the CARES Act that we haven't touched on yet is the federal aid directly to individuals. Many of your households in your congregations will be receiving that government aid, $1,200 per adult, $2,400 for a married couple, provided they meet the income parameters, and then if they have dependent children, some additional funding. But some of the folks who receive that funding will not have lost their job, will not necessarily be needing those funds acutely. And they will in turn want to use those funds charitably in their communities and in their church. And so I think it's a perfectly valid issue to raise within the congregation that if you receive the federal funds and do not have a pressing need for them, please think charitably about our community and about our church in utilizing those funds. And that is if there is giving that comes in from that, that's really supplementing in a very similar way what this loan program is meant to address. And really by shoring up small business, by shoring up individual households, those in turn should shore up church finances in some very real and meaningful ways. And so that's a component to throw into your assessment at the front end of whether you think you really need to go down the loan path as well, and whether you think you will experience a revenue shortfall as steep as you might otherwise be thinking.
David, I did an interview the other day with an attorney named Jeff Watson, who said he expects this to be easy to get into, harder to get forgiven, and made the suggestion that churches, businesses, other nonprofits create a separate account, deposit these funds into that separate account, and only pay the specific forgivable um, expenses from that fund. That way, they don't get commingled in the general operating accounts. You're only dispersing funds for forgivable amounts. If you don't disperse at all, then you could pay back those funds with a minimal interest expense. David, does that sound like good counsel to you?
Absolutely, and I was a part of that conference call as well, and I thought that was excellent advice, and really can save churches a lot of headaches down the road. To, if they are successful in receiving the loan, to really keep it segregated and just keep track of the funds and how they are applied. That makes wrapping things up on the other end much easier, and because and especially holding in reserve things that are not spent on forgivable expenses.
Because these funds do have to be spent by the 1st of June, is that correct?
The funds that are forgivable must, well, let me back up. You must apply for and receive the loan before June 30th. That's really the window of opportunity for this loan. So opening day is April 3rd. You can, if there are funds available, you can apply, get processed, and as long as you receive the loan before June 30th, you have successfully claimed a loan. You then must expend for the forgivable expenses in the next 8 weeks from when you receive the loan, everything that you can. If you don't expend it or don't expend it for forgivable purposes, you will have to pay that amount back. Does that make sense?
It does make sense. David, this has been a terrific interview. What question, or what would you like to share that I haven't asked about?
Well, I guess there is a lot in this legislation. There is doubtless more legislation to come. This is going to be a season of speed reading and speed learning for us all. And I just really can't underscore enough to folks to reach out to the resource people in their conferences. And there are a lot of folks really trying hard to get good information to our local churches. And reach out to the professionals in your own communities. This is going to be a total team effort to really get through this. We're all going to make mistakes and errors. I think we're definitely in a season where we're all going to be trying to do our best and work through this together. And I think that's nothing to be scared of or ashamed of. If errors occur, we'll get them fixed.
David, I was a bank CEO before I surrendered to a call to ministry. One of the things that I'm aware is that banks are going to apply this based on their own understanding of the rules, their own application. One bank may be asking for 3 years tax returns. Another bank doesn't ask for anything. So that is typical of the 7A loans, that each bank underwrites them using their own standards and then sends them to the SBA for underwriting. Are you expecting there to be wide variations in what people experience from bank to bank?
I think that's reasonable advice at this point. It just all remains to be seen. And so I think your lender can really be a friend in this in this time. And if you've got a person locally that can be that interface, they can really be helpful to you.
Thank you, David, for your time today. I do want to remind our listeners that we will continue, we at Horizon Stewardship will continue to post information from not just United Methodist churches. We're posting PCUSA, other denominations, good information that's curated from other places on our website. If you have something helpful that you think would be helpful for your church setting, please forward that to us, because we would love to include it in our resources. David, bless you for your time, and thank you for the energy that you put into learning about this so you could share with us and others.
Well, thank you, Joe, and thank you to the Horizons team.
Thank you.